Hello and welcome to the Q&A live webinar, which is a follow-up from yesterday's Revenue Department webinar. I'm happy to answer as many questions as is possible in the next hour to get as many as we can done today. So we'll go through the ones that have come in. We'll go through quite a few, but I do recommend you put them in the Q&A box. Will immigration get involved? I don't know what that question means. Will they be on the court? Immigration? I don't understand the question. So let's go through the questions that have come in. We'll go through quite a few, but I do recommend, if you would like them answering live, to put them again in the Q&A box, and we can go through those on there. So I'm happy to sort of help go through as many questions as we can in the next hour. So welcome to the webinar. We'll answer as many questions as we can, and thanks for joining. I'm Carl Turner, co-founder of Expat Tax Thailand. The purpose is really to answer as many questions as possible on the new rule changes for foreign sourced income for expats in Thailand. At Expat Tax Thailand, we help people understand the rules so they can make better informed decisions regarding their Thai tax filing obligations. So Expat Tax, we've got over 350 five-star reviews for how we serve the expat community for Thai tax filing and Thai tax consultancies. We're authorized and regulated by the Federation of Accounting Professionals. All of the accountants are Thai accountants, and we're a Thai majority-owned company. So we'll help answer as many questions as we can and explain the rules. So if you would like to sign up to our tax alerts and you're watching the video afterwards, feel free to click through, and we'll make sure we'll keep you updated with all the new changes to any future changes as well. A lot of the questions that we get in, they're already answered on our Ask a Question, Frequently Asked Questions page. We've got over 300 questions and answers on there. So I recommend you have a look on there. And just a quick disclaimer that the content provided is for information purposes only. It doesn't constitute professional tax advice. It should not be acted upon in isolation. It's just to explain the rules, and it's not specific advice. So let's get on to the questions and answers that have come in. First of all, if you'd like a free consultation, you can click through our website to the free consultation. They're fully booked up for most of next week, so it'll be the following week. We've got two people on the phone all times that can speak with about your own situations, look at the tax returns, for example, do an estimate, and work out how you can proceed. We do have tax filing services online. You can sign up through our website. Everything is automated and easy to do. You can sign up directly on there if you do need to file. We also have one-on-one consultations that are available. We can help people obtain tax ID numbers. And remember, we are here to help. So please send in your questions. So let's start with the first question that's come in. So what should we do when given apparent incorrect advice at our local tax office? So in this question, it says a friend went to the tax office to register a TIN and submit the tax return. They were told, if you don't have any income in Thailand, for example, rental income, then you don't need to file a tax return. And then they were told, let's have a look, second page. When challenged, then they were told if there's a DTA in place, then they don't need to register. And if you did a tax return in your home country, you don't need to do one here. The friend was turned away from the tax office. None of the answers were given, even though they do need to file a tax return and they've been in Thailand 180 days. What should they do? So I recommend, if people do have problems with the local revenue departments, I recommend you take someone who can speak perfect Thai to explain this, take the evidence that you do need to file, explain that you do need a tax ID number and you do need to file. And it's important that if you are told you don't need to file, that you get this in writing, because the rules are pretty clear and evident. With the revenue department video yesterday and webinar, It's pretty clear if there's a double taxation agreement in place, even if you've paid tax in another jurisdiction and you've remitted in that income, you still need to file a Thai tax return. So let's get on to the questions that have come in. What I'll do is I will turn off this presenter. One second, let me close this down. And what I'll do is I will put the questions live on the screen. And that's going to be easier to go through these. So let's go through the ones that have come in live first. So let's have a look at the first one. Bear with me, I've got to add it onto my screen. So the question was double. How will immigration get involved when you apply for visas? Will immigration look at tax payment details? So immigration now are linked to the revenue department. It's likely that we've had 2 people in the last week where they have gone for their visa renewal and they've been asked for tax certificates. So yeah, it's likely that immigration will can check, and it can be checked through that, as well as obviously from the revenue department as well. Next question. I've been a tax resident of Thailand since 2007. I've held shares and property in US and Australia prior to 2024. If I sell shares and property in 25, will the capital gains be tax calculated as a cost basis as of the 3rd of 2024, or cost basis when I purchased them, assuming I transfer the total sale value to Thailand? So this January 2024 valuation is just for cash in the bank. It's not for shares. It's not for property. It's not for any other type of asset. If you're a Thai tax resident, when you sell that asset, then we look at the capital gains on the asset since you've held the asset. So if you've held the shares for a long time, then it's a capital gain since you've held the shares. Same with the property. Also, we have to look at the double taxation agreement to see if you can offset with any tax in the other jurisdiction. But yes, there's no cost basis at the date that you moved here. That's not how it works. We've got a video on capital gains. If you'd like to watch that, that'd be quite useful, I think, for yourself. And also, we've got a webinar on property sales as well. Next one. Is an Australian government pension taxable? I don't really know what that means. Does that mean age pension? Age pension is taxable. Superannuation is taxable. But if it's from a civil service for working for the Australian government, not a age pension, then that's different. Then that might fall under government services. Okay, good question here is, what evidence do I need to provide if I do remit funds to Thailand that only brought cash from 2023, I assume? If there's no bank statement to show cash brought over, then is it just okay based on my word with no evidence? Don't really understand the point. So if you're asked under audit where the money's come from, you've got to be able to prove the source of the funds. If you can't show that with any evidence, then yeah, could be a problem. So you need to keep the bank statement showing your account balances as of the 31st of December 2023, and then you need to be able to show a statement then from that point onwards, all the withdrawals from that account, to make sure that you can still justify that money's in the account on a first in, first out basis. Right, good question here. When am I required to pay tax and remit the money owed to the revenue department? Do I have to pay tax on the money remitted to pay such tax? So For 2024, you need to file a tax return paper-based by 30th of March this year, 8th of April if we're filing online. For example, with ourselves, we can help clients file all the way up until the 8th of April through our online client portal. When we file, we will get the draft, so we can submit tax returns, and we are for clients right now. So we file now, but they don't have to pay until the 8th of April. That's the deadline. If you pay after the 8th of April, then they add 1.5% on top of the bill, the tax bill. So that's when you have to pay. How do you pay? Yeah, it needs to be bank transfer within Thailand in Thai baht, or like scan QR code, and that, or it can pay at 7-Eleven. It's a small bill. But if you bring money in to pay the tax, then the same rules apply. Where's the source of the money that you've remitted in? I'm bringing in some cash into Thailand. Most of it's going to pay for international school for a daughter who's on a special program since she's got Down syndrome. Is this taxable? It doesn't really matter on what the purpose of what you're spending the money on. If you are using the money, if you're remitting the money into Thailand, doesn't matter what you're sending it to, whether it's to the school or to a hospital or to a third party, it's still you remitting in the assets. It's still assessable income. Look on here. Being a retired Australian couple, 64 and 69, we are self-funded superannuation pensioners. We have 70K coming over to cover the visa requirements. Individual health insurance, what deductions are available for us? Okay, yeah, okay, good question. So you're bringing in 70,000 Thai baht, I assume, every month for the visa requirements. So if you're married, you bring it in from one source, you can claim the 69-year-old. If it is a 69-year-old that's filing, depends. If you're both bringing in income, it's different. But let's assume one of you is bringing over the income, one of your superannuations, then you would claim that personal allowance for both of you. Let's go through what I'll do. I'll help with this. I'll help show a tax return that might be quite useful, like a calculation. Just bear with me 1 minute to actually load this up. Might be useful to do on the screen, you see. And then people can actually understand how the return looks. Okay, let's just save one. Make a copy. I'm just loading one up on the screen. Example calculation. Bear with me 1 second. I think it'll be quite useful for people. Example. So let me load this on. Let me share this screen. Okay, so what we'll do is we'll go through the return for this person. So the 69 and 64. So let's assume it's for the 69-year-old and they're filing and the spouse has no income. So we tick personal allowance, age allowance because they're over 65 or older, and the spouse with no income. They're bringing in pension, so they can tick another 100,000. I don't know if they've got insurances. It says we have individual health insurance, so we can add on. Let's assume that the premium's over 25,000. So let's add that on. So their total allowances and deductions for this specific person would be. Am I sharing my screen? I don't think I am I? Let me. Yeah, I think I am sharing it. Right. Okay. So 435,000 would be the allowances. So if they're bringing in 70,000 per month, eight 140,000 per year. So they would have 435,000 they can deduct off. 405 would be the taxable amount. So they'd have 150,000 in the zero tax exempt amount, some in the 5%, some in the 10%. So the total tax for this person for bringing in that amount would be 18,000 Thai baht tax bill, or 2.14%. So if they are Australian, then there is no tax credit to, they've not paid tax in Australia on that superannuation. So what does that mean? It means that they would file the whole amount. So on our services, I'll show you on here. For these types of people that are bringing in pension income where they don't have any tax credits, then the most suitable is this essential tax filing, because we don't have to claim tax credit, so we can file that all online. You see, 8,000 Thai baht. They just fill out their details. We can obtain a tin as well for them if they do need that. They can get that from their local revenue office, or we can obtain that for them through our online system. We can get that within a week. So I hope that's useful to answer the question with the tax amount and then how they could proceed. Second, let's have a look at the next question. Are transfer out of dissolved accounts of Swiss second pillar considered as income or saving? Yeah, so that's even if you disinvest from a second pillar, it's classed as pension income, but it might be good for your specific situation to have a conversation because it might be a bit more complicated, but I assume yes. Question about exchange rate. Submit tax credits. I'd like to have tax receipt for Thai deadline submission. Yeah, so we can use we use the Bank of Thailand rate for the specific date for those funds when they were sent to Thailand for the tax credit that was available. So I use the Bank of Thailand. And for the tax credits, yeah, we can claim for the 2 years. We can do the estimate for the amount for the remainder. Good question here. If you make remittances from both pension and savings prior to 24, do you need to declare the savings portion? No. So on the Thai tax return, we only put down assessable income sources. So we don't put in there if it's not assessable income. So you'd only put down the pension amount. We'll look at this question. One question here that seems a bit complicated to be answering on here. I sent donations from my overseas bank account to different recipients, both natural persons as well as Thai registered charity organizations. Taxable income on my part. If you send over assets to Thailand and it's foreign source income, it doesn't matter what you send that to, whether it's to a charity or anywhere else, it can be assessable income. So that's a yes. I've actually collected most of that money from third parties abroad. Okay, donations. I mean, this is a good one to talk one-on-one for this specific, how you've got the paperwork, what it looks like, and whether that qualifies. Pretty complicated to answer on a question like this. Let's have a look at a few more questions. So look, there's some really long ones. I think it's really difficult for me to get these done on the screen. How will the Thai revenue get notified of Thai tax resident status of a foreign person? That a foreigner is a Thai tax resident will be determined at the date of when the 180 days of stay in Thailand are completed, normally any day after. So any process fixed in the administration will happen today. What is the process for foreigners leaving the country when there's tax resident? So it's 180 days in a calendar year. it's mainly down to common reporting standards. So if you have addresses in Thailand, for Thai banks, and you've got overseas, that's why they're asking for the details for those CRS forms from KBank. They started to send the information. They want to know where you're a tax resident, where you've got other assets. So they will start sending the information from Thailand over there as well. So they can already track with the ETA system the amount of days that you're in Thailand. Immigration links direct to the revenue department, so it's really easy for them to track now. And the CRS information's already sent in an XLS file every year. So I hope that answers the question. Okay, if someone is a tax resident in Thailand but keeps a pension payments and sales of a proceed of investments in a bank account overseas, doesn't remit these, then it's not taxable in Thailand. As a tax planning strategy, you could make sure that you're not a tax resident for one future year by, say, spending 5 months overseas. During that period, future calendar year, all previous years' pension payments and proceeds could be brought into a Thai bank account. Would this planning be acceptable? Well, the problem is nobody's tested that yet. And to be honest, the income was earned in a Thai tax year. So regardless if you remit, it's when it's remitted into Thailand, so it could still be a problem. I understand what you're trying to do with that, but I recommend that's not really a great strategy for tax planning because the event happened in a Thai tax year. It's just that you're bringing it in a different year. So I'd just be a bit wary of that sort of planning. I think a better strategy would be yeah, it'd be better to sort of have another plan, to be honest. Can I use tax paid in the UK to 6th of April as a credit against the Thai tax year ending? Yes, you can. As long as for the assets that you've remitted into Thailand, yes, potentially, if the DTA allows that. If you hold an LTR visa in one of the 3-0 rated categories, I assume that means wealthy pensioner, or wealthy global citizen, I assume. You still have to file a tax return on remitted / assessable income, even for a zero liability. So there are two parts with this. One, if you've got the LTR visa, you still have to remit in the income in the next tax year for it to be exempt from foreign source income. So if you do bring in income in the same tax year, then you still have to file a Thai tax return. So you have to follow the revenue code, not the LTR states that it's exempt. You have to follow the revenue code, which states you have to bring it in the next tax year. If I purchase goods with a foreign credit card and I pay off with non-assessable income in my US bank account, do I have to file a tax return? No, not for this specific asset. If you pay that off with assessable income, then it could be seen under audit as tax evasion or trying to get around the rules not within the spirit. But if you do use a foreign credit card and pay that off with non-assessable income, then that doesn't have to be filed on a Thai tax return. Yeah, one question about compensation payments and benefit. Is this taxable in Thailand? If you've got all the paperwork, then it's likely not, but it's important that you double check this. That's important maybe to arrange a consultation to go through the paperwork and make sure that what you've received and how it's been received is compliant to not be classed as income. Local revenue officer said I must pay all tax due in Thailand and claim this back from the UK HMRC. Yeah, I recommend that you follow the double taxation agreement. This takes precedence over the local domestic tax rules. So yeah, you can also call if you do have problems and you want to deal with this yourself, you can call the Thai Revenue helpline, right? If you don't want to use a paid service like ourselves, which is 1161. for queries like that if you don't want, if you wouldn't like us to help with that, but we can help to submit this. On the P&D note one, the only form to submit doesn't seem to have anywhere for tax credits paid in the home country yet. It has to be sent as an attachment if you're filing yourself. There's not a specific box for that. Good question. Please describe how an expat married to a Thai could use gifts to a spouse to minimize taxes. So gift tax rules are really to reduce down inheritance tax rather than income tax. So if you are if you're remitting in foreign sourced income, gifts won't work for this specific, but if you bring in non-assessable income, you could gift to your spouse up to 20 million Thai baht per year to reduce down your potential inheritance tax liability, which is 100 million Thai baht to any individual person. Okay, question here. My self-managed, self-funded pension fund was in prior to 2024 on all interest earnings and currently has already had all taxes paid prior to the year. I cannot get tax information from my fund manager either. So if you're in a pension structure, super, doesn't really matter on the gains or the investment return. If you take remit assets from there into Thailand, it's pension income. It's all added as income into Thailand and there's no tax to deduct. So it's pension income rather than investment income if it's in a super fund. It's a question I don't really understand. If is transfer from domestic crypto exchange considered remittance of income? I don't really understand the question. Maybe if you could add a bit more detail, that'd be good. I'm here. Okay, good question. I'm here for less than 180 days and I bring 300,000 baht in. I presume I don't have to file a tax return. So if you're a non-Thai tax resident and it's not domestic income or Thai source income, then you don't need to file a Thai tax return. If you're over 180 days or more, then we need to see what you've remitted in. If that was pension income, even if it was only 300,000, then you'd need to file a Thai tax return over because it's over the minimum threshold. Minimum threshold for pensions is only 220,000 Thai baht of being received into Thailand for a married joint filer, and it's 120,000 for single. So it's not much. Any decision on tax on foreign credit card purchase but paid off with non-assessable funds? I think I've answered that. One specific question about charity operation and how to fund it. I think that's one for a separate conversation because there's a lot of questions that we need to ask to be able to have a look at that. Okay. Do I have to submit bank statements from Thai and home country bank when I file my return or only need them if I am audited? Depends what you're remitting and what you're trying to claim. If you're going to claim allowances and deductions, then you need to submit everything that's been received in the Thai account. Depends what you're submitting. Good question here. I've answered this one already. If you send in funds which do not go to yourself but sent to a supplier or a school, is it still remittance? Yes, it's still remittance from you remitting into Thailand. It doesn't matter where it's sent to. I'll make sure I send the recordings for this and the revenue video out separately as well. I've had a question on that. This is a difficult question. Assuming old cash savings in my safe can't prove the source anymore, which I exchange from time to time. Difficult. Anti-money laundering rules are quite strict now. If you're moving assets in from the safe, I mean, you have to prove where the assets are from potentially in the future. Depends how much it is. Yeah, if it's cash in the safe, it's got to have come from somewhere. Uh, I understand I can claim contributions to a pension fund. I'm Australian and my pension fund is in Australia. No, it's only for Thai provident funds and Thai domestic Thai tax saving investments that are available for tax to claim contributions. You can have a look on our website. We've got the details for all that on there. If transfers from foreign source income are being taxed, will Thai revenue gift deductions on donations to overseas charities? No. If they're only if they're on the list of Thai approved charities. They might change it, but at the moment, no. Send my partner a gift in the form of cash remitted to purchase a house. I understand that she's not liable for tax as it's a gift, but there is been conflicting reports whether I and the sender remitter unlikely to be taxed for such gift. It depends on the source of the money that you're sending across. It's not really her liability, it's yours. When we obtain an LTV visa, do we need to pay taxes for the period before receiving the visa? Yes, you do, yeah. And also, you're exempt for the next tax year. If you'd like, we're going to have a separate webinar on the LTR. We've met with the revenue a few times about this now because there's a bit of misunderstanding from how it's been explained. But I'm happy to try and help explain this so people can just understand the rules. Good question. So if I'm a tax resident this year and I file a tax return for this year, however, in the future years, I'm not a tax resident, will the revenue chase me in future years? Don't know what you mean by chase. Do you mean, will they ask you to file a tax return if you're a non-Thai tax resident, so less than 180 days and you don't have domestic income, then you don't need to file a Thai tax return. A long-winded question. So tax resident 1 year, non-Thai tax resident next year, then tax resident again. In which years has this person to file a Thai tax return if the foreign person remits in year 2 taxable income? Is this money in year 2 tax or not? No, yeah. So if you're a Thai tax resident and you earn the funds and it's happened in a Thai tax year and you're remitting the next year, I just recommend you don't do that because someone will test that. They've only just changed the rules for this, so I think it's a good one not to be the test case and have a ruling on this, to be quite frank. Have there been any discussions on exemptions on property purchases? The tax burden on high-end villa purchase on top of the land tax transfer would make this extremely prohibitive. Don't think it's really affected the market because the majority of people that buy properties in Thailand, if you look at the stats, are not Thai tax residents with foreign source income when they buy the property. They're usually non-tax residents. I've not seen any news to put exemptions on for property purchases, but that may happen. Okay. Do I need a tin or do I have to submit a tax return even if I have no income? No. If you don't have income to file, so if you're under the minimum threshold to file a Thai tax return, then you don't need a tin. One question about differing tax years. It'd be good to get in touch to explain your situation to see what tax credits you need to claim for. How the Australian tax years opposite to Thailand. So yes, you can do some analysis and talk through this and how we claim the tax credits separately. But yeah, that is possible. Okay, one question. I'm really read it through it. Okay, if I have 1 million US dollar savings at the end of 2023, can I assume that if I remit and pay off my credit cards over the next few years and don't have to declare straight pay tax until the full amount is used? Yeah, so if you've got cash in the bank from previous years, so you don't need to file a Thai tax return if that's all you are remitting. Do recommend you keep a very good record and you keep that on hand on your phone just in case you are asked. To prove that, whether that's that immigration or whether you are asked for that even at the bank. What if a gift is made to wife's overseas account and she transfers money into her account in Thailand? Well, it depends where the source of the money is that's been gifted. If you're a Thai tax resident or not, I do recommend that you, um, yeah, seek advice for that specifically. Is income from a UK SSAS treated the same as income from a standard pension vehicle? Yes, it is exactly the same. So it's just classed as income. Every single pound that you remit in is classed as income. Also, with like that UK specific question, there are no you don't get any tax credit or tax deduction for tax-free lump sum. So if you do remit in the tax-free lump sum amount, which is 25% in the UK, that's taxable in Thailand. So just be careful with that as well. I receive age pension and lodge a zero tax return in Australia. Is pension still taxable in Thailand? So I assume because you've got just age pension, it's a reasonably low amount that you're receiving per year. So due to your age and the Thai allowances and deductions, it's likely you don't have to pay tax in Thailand, but you'll have to file a Thai tax return, if that makes sense. Okay, I've got a father is a resident in Thailand. I gift him 65,000 each month to meet the requirements. This income is earned and taxed in Hong Kong. Is this income assessable and does he need to file a tax return? If you're in Hong Kong and you're not living in Thailand and you're gifting in the money, then no, he doesn't need to file a Thai tax return for that amount. You're gifting in the funds and it's a gift without, you're not going to get the funds back. It's a gift without reservation of benefit. So there's no tax implication for your father if you are in Hong Kong and remitting the funds to him. So one question about state government pensions. So it's federal pensions are excluded. For specifics like that, it might be good to talk about your specific separately. All right, one question here. If foreign sourced income is coming from consultancy fees, which are paid by a foreign client into an overseas account, is this taxable in Thailand? It is if you remit those into Thailand, yes. I'm not sure if I have to file a tax return. Does it make sense to apply for a TIN now, avoid late filings if needed, even though I might only need it in 2026, or any advantage of having a TIN? If you don't have a Thai tax filing obligation, you can't even obtain a TIN. So it'd be better to work out. I mean, it's pretty clear, now the tax year's finished, if you do need to file or not. So it just depends on your income sources. Maybe you can put it in the chat and we can go through it. Um, and we can go through it separate, or book in a free consultation with one of my colleagues and they can go through that with you. If the only money remitted to Thailand was from US Social Security pre-savings is non-taxable, how about 401k distribution that was not remitted? I don't really understand the question. So I think this means if you receive other income as well overseas, do I have to file that? No. So Thailand's only a remittance tax basis at the moment. So I assume this question is if I bring in Social Security and savings from pre-2024, do I have to file a tax return? Then no, as long as you don't bring in the 401k. If you remit in the 401k, then you have to file it on a Thai tax return, pay the tax in Thailand, then claim that back on the US tax side. Good question here about gifts. Again, there's a bit of confusion around gifts. It's not really a way for, in my opinion, like personal income tax planning. You mentioned about gifts being sent, so it's 65,000 a month. Couldn't we transfer funds to our children and then our children gift us these funds each month? That's not a gift. So a gift, that's a gift with reservation of benefit. So it means it's not a gift because they've given you the money back or you've given them the money back. It's going to be a gift where you're not benefiting from them any time in the future. If you'd like to keep putting the questions in there, feel free, and I'll start going through some of the questions that have come in now. We've gone through 60 already. So let's go through some more. Let me load up the screen. I've got more screens open. I've got to find the right one with all the questions on now. Sorry about this. Found it. All right, okay. Oh no. Bear with me 1 second. Right, okay, I found it. More difficult than what I thought to. Okay, so the long ones where, it's specific advice about tax returns, I think they're good for the 15-minute free consultation or one-on-one because it's just there's a lot of extra questions on these. Okay, let me just load these up onto the screen. 1 second. Okay, I'm back with you. Sorry about that. If someone is a tax resident but keeps pension payments and proceeds from sales, I've read this question already. They put it back in the question, so I've answered that one. One question about worldwide taxation. I'm an expat from Germany living in Thailand and I've no income in Thailand. I'm worried about press reports about tax laws about remitted foreign income and change to worldwide. Will I pay income tax on remitted foreign income or on worldwide income in 2024? Will I pay income tax or remitted foreign income on worldwide income in 2025? So, okay, good question. So there's been a fair bit in the news recently about moving to worldwide taxation. That was from the finance minister. And this is all down to common reporting standards and moving away and moving to a worldwide taxation basis. There's nothing being put in place yet for this current tax year. So 2025, there hasn't been any mention about worldwide taxation. So it's still a remittance tax basis. Whether that happens next year could potentially. But no, for 2024 and 2025, it's still a remittance tax basis. Worldwide taxation could come in next year or the year after, but I don't think we need to worry. The devil's in the detail. We need to see how this would look. So for example, I like to give the example about Cyprus as an example. Cyprus is part of Common Reporting Standards, one of founding members for automatic exchange of information. They have a worldwide taxation, but for non-residents, there's no taxation on capital gains. And if you're a tax resident, then it's 5% tax on your dividends and pensions income. So it can be quite favorable, even if you are in a worldwide taxation. Okay, let's have a look at a few more. Another one, same basis about currently only if funds are moved into time, or chances of the income being taxed, even if it's not brought into worldwide taxation. Yeah, so it might change, but they might have to rewrite the revenue code. Okay. I'll start going through the questions that have come in live. If I stay here over 180 days and remit only 120,000, I'm single. Do I need to get a TIN and do I need to file a tax return? Depends what the income's from. If it's from pension income, 120,000 is the limit that you need to file if you're single. But if it's from investment capital gains or rental property, it's only 60,000. So maybe you need to file. But if it's from cash or from another income source that's not taxable, then maybe not. So we need more information for that to give you the answers. Not a question, just thank you. Yeah, thanks for the comment. I'm happy to try and help people understand the rules. For a worldwide scheme, they would have to offer something in return, such as health service and a pension. Um, mm, no, I don't think so. I don't think that's how it would work. Okay, one question about remitting in assets for a purchase for a capital for a company. Yeah, there are ways to sort of do this, so it might be good to get in touch to discuss this. There are ways that you can look at that for capital for business. Um, right. Okay. One question. Okay. Further to 120,000 baht is from savings and super pension. So if it was all from super, then you'd have to bring in less than 120,000 to not file. If it's from savings, then you wouldn't need to file. Not a pension. I've been saving into a fund over many years and I take a distribution, a lump sum, and remit the money into time. How do I show it's pre-2024 money? Don't really understand. So if it's an investment fund, it's not pre-2024 money unless you've already sold that before 2024. If it's in an investment fund, then it's taxed on the capital gains. One question about thrift savings programs in the US. Our interpretation is that this is a civil servant pension, um, but you might want to speak to um, your pension provider to see if it does qualify as a civil servant pension. Okay, let's get back onto the questions that have come in by email and on the previous webinar. Okay, one question about offshore, old offshore money from 2023. Can I bring it in any time in the future? Yes, you can. You just need to make sure that you can justify that that money was still in the account using first in, first out method. I'll explain how to do that. So basically, you have your account, all of the withdrawals come off that balance as of the 31st of December 2023. Withdrawals anywhere. So it draws down from that cash balance, if that makes sense. So you can use it any time in the future. Okay. one question about English language version of the PND 90 form. In my opinion, if you are filing, this is my opinion only, if you do want to file online yourself, you better to use the Thai version. It's more up to date, but you can use the English version. I'd use the Thai version, or that's why we have a tax filing service for people to take that away, take the stress of having to file away. Okay, one question about, well, that's horrible to read. Okay, let me try and read it through. This question's about assessable income and double taxation agreements. So if they've paid tax in another country and they've got no liability, should they have to file? Yes. So as what Kun Patrapal mentioned yesterday, he mentioned that if you've just because you've got a double taxation agreement, you're taxed in another jurisdiction, it doesn't mean that you don't have to file a Thai tax return unless it is excluded under the DTA. You still have to file a tax return and claim the tax credits. Okay, let's try and go for a few more. So and find some interesting ones that's not. A lot of these are on our website on the frequently asked questions. So just trying to have a look for some that are a bit more interesting to put on. They're all pretty much the same sort of question that we've answered quite a few times before. Okay, let's go through the ones that have come in live. That'd be better. Is inheritance tax free? Yes, overseas inheritance, you remit that into Thailand. Yeah, it's not assessable income, it's inheritance. How do you keep these records as it is a property that will ultimately be sold at a later date? So the point when you receive that inheritance is the point when, the even if you receive the inheritance, whatever happens after that point onwards, then it could be assessable income after the inheritance was received. I understand the zero capital gains on personal items, e.g. car, is a house included. It was a primary residence overseas. Now, if it's an overseas property, it's not tax free. Same in Thailand, you pay tax on the capital gains. Gains on investments since inception, so 50%. Can I realize that in a non-resident year, reinvest in that year, and then effectively my gains start again? Yeah, so that's about tax planning in terms of like realizing gains in a non-Thai tax year. You can potentially do that, but the problem is what you've got to try and avoid is, let's say you are a non-Thai tax resident for a year, you've got to be aware that you don't pick up another tax jurisdiction that's worse than what you're trying to achieve. You might reset to where you're from, like if you're Australian or Canadian, for example. So it can get quite messy if you're trying to avoid being a Thai tax resident to disinvest assets. You've got to really do some good planning for that. And it means obviously you've got to be out of the country for a long amount of time as well. Uh, if you did a tax return in your home country, you don't need to do one here. Yeah, I don't know if it's a statement or a question. You do. You potentially do. It depends. It depends what you remit into Thailand, what you transfer into Thailand in that year. Got a few more. I was living on superannuation fund cash withdrawals, not pension, remitted to Thailand prior to 2024 without a tax treaty to cover it. Will the Revenue Department be retrospective looking at these remittances? The old rules show that you taxed in the jurisdiction of Australian pensions where you live in. So if you remit that pension into Thailand, then it's taxable in Thailand. And the old rules you had to bring in the next tax year. So if you'd like to have a chat about that specific case, then feel free to get in touch. All right, good question about if I transfer funds from savings account in Australia and the source could be super or rental account, how will the revenue department know which is the original source? Well, you file it on your tax return and you state clearly what it was that you remitted in. So you have to justify which you did bring into Thailand. Depending on your situation, knowing most Australians that are non-residents, the rental income tax in Australia is pretty high. So it might be beneficial, in your situation to bring in the rental property income if that's possible, because you'll have a tax credit to offset the tax in Thailand, but it just depends on your own situation. I recommend you get in touch to go through that in more detail. But yeah, it might be better to bring in one income source than the other, because you might have tax credits for that. Is future, one question here. Is future inheritance from 2026 will be classed as income? Inheritance is not assessable income. The inheritance tax limits at 100 million Thai baht. All right. Okay. Yeah. Good question. So this is about like mixed pooled accounts in a pre-2024 account that's got new income as well. How do you know what you bring it in? Well, you can use first in, first out method. So you can choose that you bring it in your pre-2024 assets if you've still got those and draw that down depending on the withdrawals that you've taken out. So it's up to you to decide, but you've got to be able to justify and show that. Let's have a look on some of the questions that have come in. We've got quite a few. The problem is we've had hundreds of questions. I'm trying to get through them all. If I do miss anyone, please bear with me. Or I'll put these on every week. So if I do miss them, I will try to make sure that we do answer them all. Unless it's really technical and it's not really a quick answer, then we'll need to have a conversation, either the one-on-one paid consultation, that's usually quite beneficial for people, or the free consultation, you can take advantage of that. The problem is, for example, I'm booked up for the next 2 weeks for those, and the 15-minute consultations are booked up for the next week, and time is running out for tax returns. There's 10 weeks left. There's a lot of people that are coming to us now with a lot of technical analysis for the tax returns, and they've got to provide a lot of information from their home country. That's fine to do now, but if they wait another 3, 4, 5 weeks to submit, it's going to be quite push and go whether they can provide all the information to file on time. So it means they could have late filing charges from the revenue department. So it's important that people, if they do want to use a filing service like ourselves, that they submit all the paperwork as soon as possible. And if they're going to do it themselves, make sure they don't leave it up to the deadline, because the website can go down. If they go to the local revenue office to file, make sure they do that with plenty of time as well, because there will be quite a lot of people, Thai nationals and expats trying to do it at the same time. So I do recommend people, even though there's another 10 weeks to go, yeah, that's not that long, because you've got to get all the documents in place, submitted, tax ID number. So there's a lot of work to do before then. Okay, so look at a few more questions. Okay, one more question and then I'll have to jump off. So For an LTR visa holder, it also draws a salary in Thailand and pays income tax to the cash remittances from cash in the bank and time deposits exist in 2023 covered by FIFA. Do I need to submit anything other than that? No. If you're just bringing in assessable income from overseas, sorry, non-assessable income, that doesn't need to be filed on a Thai tax return. Hope that's useful. So I hope that's been beneficial. Yeah, I really hope that that's been useful to go through these questions. Say I'm happy to go through these every week to help people understand the rules and help people understand, how they can file, whether they use filing service like ourselves, or if they file direct, or whether they don't need to file. So happy to help to explain the rules. If you do have any questions, feel free to get in touch. We are here to help, and have a good evening. Bye bye.